we're here in Milan, and I'm very happy to have Shu Nyatta, founder and managing partner of Bicycle Capital. Shu is also board member of Endeavor, the world's largest leading community for high entrepreneurs. And you're running a $500 million growth equity fund focused in Latin America with a vision that extends far beyond the region right now. You know?
Yes.
So Shu, maybe you can share with us, how would you describe Bicycle Capital's investment thesis?
Bicycle Capital was launched after I left SoftBank. And the last thing I did at SoftBank was invest in Latin America. But before that, at SoftBank, I invested globally. The opportunity in Latin America was to put capital in a region that didn't have any, with the same thesis that was working everywhere around the world. So that job hadn't been finished when I left SoftBank, and so we launched Bicycle initially to focus on finishing the job, so to speak. That's how we said it. But since then, a lot has changed in the world. AI showed up in 2023 at the end of the year, and now it's even more present than it was before. The world has become a lot more interconnected through AI, a lot more separate in other ways. So our core is to invest in durable growth in Latin America, mostly Brazil, because that's the biggest market. But increasingly, we're doing Pan-American investments. We're doing AI investments to bring into Latin America, which we're very excited about. We're talking to several companies in China that are coming to Latin America. There's a lot of it interested in this cross-fertilization driven by technology and AI. So we have a core in Latam, but we're increasingly a lot more global.
Okay, and the focus right now is AI. So what are the main challenges when it comes to AI distribution globally?
It's easy to say we invest in AI. It's difficult to define exactly what you mean when you say that. So for us, it means something very specific, which is we invest in making AI useful. We're not investing in foundational models. We're not investing in hot, high growth, early stage startups. We want to apply AI. And usually AI is best applied in businesses that already exist. So a lot of the value of AI will be captured in the next 10 or 20 years by existing companies. It's not just OpenAI and other startups. People think they've missed the boat if they're not investing in the startup world of AI. That's completely false. I think if you invest in traditional businesses that can apply AI, you can capture a lot of value. And the way we talk about that is AI is inventing intelligence and making it very cheap and free, like electricity coming out of the wall. But businesses that can use that electricity can create a lot of value. So what do you do if you have intelligence coming out of the wall, like you have electricity coming out of the wall? If you have really strong distribution in a market like Brazil, in markets like Europe, in a company that's founder-run, even if it's an older generation founder who can make quick decisions, then you can capture immense value with AI. So we look for companies where you can apply AI usefully, and we look for AI tools that help you make AI useful. That's not the foundational models. Often it's companies you haven't heard of as much because they're in the middle. They're doing the messy stuff of cleaning your data, connecting your systems, providing security and governance so that you can deploy AI usefully in your company. That whole layer, we call it the messy middle, is where we focus, and specifically on large companies with good distribution. So we bridge large companies with good distribution to AI companies that are solving that messy middle.
How do you actually make sure that you can apply AI in established companies? Because I think that's the most challenging.
There are very few companies that will get this right. There's a starting point, which is you need a company where AI can be useful. If you're a mining company that's extracting stuff from the ground in Chile, I don't know how much scope there is to make AI useful in your company, maybe on the margin. However, if you're a very sales-driven organization with branches around the country selling complex financial products, you can make AI a key part of your sales process, your customer retention process, your conversion process. All of that can dramatically change your business. And so you need a business where AI can be useful in the first place. That's step one. But it's not enough. You also need a business that can adopt AI quickly. And usually that's not businesses that are very professionally run with management teams and a lot of structure. Usually it's family-run businesses where they still behave not like startups, but like founder-led companies. They can make decisions quickly. They can decide this is what we're going to do. And they don't have to go get a shareholder vote and see what happens to the stock price and all of this. They can just implement what they need to implement. So we look for that cross-section. A business where AI can actually be very impactful and the governance structure to enable fast decision making, usually driven by a founder or the founder's kids. There's a lot of generational transfer happening right now around the world in these very large founder-driven companies. The good news about Latin America, you have a lot of founder-driven companies that basically run all the economies in the region. I think the same is true to a large extent in Europe. The same is definitely true in Southeast Asia. And in all of these types of companies, you can drive very rapid adoption. There's a big opportunity there.
Yeah, I mean, actually, I wanted to ask you about that because we do have a lot of family-owned companies here in Europe that need to transform the way they do things. That is also the challenge is actually to start from like top down, right? How do you make owner and the CEO to understand this needs, and how can you apply this approach, of growth investing to this European setting that can be a bit more complex, because we're talking about a wealth that's been there for many years already.
But part of the good news here is you're not trying to convince a patriarch or the patriarch's children to abandon their business and go invest in startups. That's a very difficult argument to make. What you're saying is you need to adapt your existing business, which is very good, and make it even better. Make it grow faster, make it grow more profitably, increase the multiple. Like those are the three things that happen when you adopt AI well. You grow faster, your margins get bigger, your multiple goes up. There's three ways to increase your value without destroying the business. So this is not about creative destruction, or you have to destroy what you're doing and disrupt yourself. It's about keeping the advantages you have and making them even stronger with AI. But it requires real work.
And when you talk about, because Latam and Europe, right? I mean, there's a strong cultural ties between Latam and Europe. But in the end, if you think about investments, about exchanging wealth, there's not that much happening. How can we make that better?
To be honest, it's a bit of a missed opportunity. So right now, if you go to Latam, let's say to a hospital, you used to see SAP and Siemens machines, SAP ERP and Siemens machines doing the scanning, a lot of European flavor. That's all changing. The ambulance is probably a European model of car. It's all changing and being dominated by China. Instead of the Siemens machine, you'll get a machine from United Imaging in China. Instead of the, I don't know what brand of ambulances that are made in Europe, you'll get a BYD ambulance from China. China is replacing all of the equipment in Latin America, big time. The US is replacing all the software in Latin America, and some locals are too. And Europe, for whatever reason, is not in the equation, even though you're a bit engaged with Latin America at some point, which is why you have SAP and Siemens already there. But in this wave, it's China and the US. There's no Europe. And I think that's a big thing to reflect on for Europe, because Latin American markets are big. They have a direct connection to Europe. I mean, culturally, it's Europeans mostly who are in these markets, and they're growing very fast. So as you think about any company's growth prospects globally, you have to have at least Brazil and Mexico on the map, because they're such dynamic, interesting, growing economies. And for some reason, Europe doesn't do that right now.
Europe is not an option. But also for Europe, Latin America is not an option either. I'm telling you like the general conversation, right? Yeah, I mean, if you want to go somewhere, we all want to go to the US, If you want to grow, you go to the US. If you want to learn, you go to the US, And actually, and in Latin America, it's not that we go to China. China came to us, and they did a great job. Yeah. So I think the challenge is there. Not like start like seeing that like the US as the place to be and start like looking at each other. And this brings me to the concept elsewhere.
You could do both. People can walk and chew gum. You can go to the US and Latin America. By the way, it's the same time zone, basically. It's the same part of the world. I think it's easy once you're in the US to address Latin America. And you're about to raise the idea of elsewhere. So elsewhere is this concept that was pioneered by Endeavor, which is a mentorship organization for entrepreneurs around the world. And Linda Rodenberg, the CEO and founder of Endeavor, loves to talk about elsewhere. It's provocatively labeled elsewhere because it means non-US, non-India, non-China innovation ecosystems. That's what elsewhere is, which includes, to some extent, Europe, because Europe tends to be ignored by the global VC capital markets as like a secondary market. It's really about China and the US. In these elsewhere markets, founders who have a unique insight into a local problem can, for the first time in history, build a company overnight. They have all the tools they need to do something magical super quickly. That's never been true before. capital is much more global than it's ever been, but not that evenly distributed. And giving these founders more capital to solve local problems, especially with the AI tools, is a unique opportunity in the history of humanity. And so the elsewhere opportunity is bigger now than it's ever been. And you're seeing companies emerge with great success in surprising places. Endeavor has been present across the whole world, and some of their best returns have been from Turkey. They have a fund also connected to the organization. Turkey. Brazil has had incredible returns and exits. Argentina has had incredible returns. Uruguay has had incredible returns and exits. And now in this AI wave, you're getting companies from Poland and from North Africa that are yielding a lot of really good returns. So innovation is much more evenly distributed around the world because human beings all have the same potential, but they haven't had the same access to tools, which now they do with AI, and to capital. And if you put those two together, you'll get amazing things.
And when it comes to this concept of elsewhere, why do you want to bring it here to Milan today?
I think, I mean, this is an outside observer speaking, so I don't want to overspeak, but in Europe, the mood about VC has tended to be a little more pessimistic, and I've seen this increase in the past few years. And now with AI, there's a feeling of, maybe we're getting left behind. I don't think that's true. I think it's a question of focusing on the right places in the stack to build. And I think the time to be optimistic is exactly now, when founders can do anything from anywhere. And so anyone applying capital to this idea of technological transformation should have the most global mindset they've ever had now. It used to only be about the US. And then it used to only be about the US and China. China is going through its own set of issues. It's still about the US. The US is going to be around innovating for as long as we know. That's true. But the opportunities elsewhere are bigger than they've ever been and much less competitive. To your point about going to the US, everybody's going to the US. Everybody's trying to get a piece of OpenAI. The result of that is a lot of people don't know what they're buying, and they're paying a lot of fees, and they're paying high prices. If you pick your spots in other markets, you can get some really incredible outcomes. There are great companies like 11 Labs from Poland that have emerged. There are AI companies being built in Argentina, and Milan just won a very important victory 2 days ago. I think it was yesterday or the day before. That should put Argentina on a very different trajectory, and they have really good technical talent. There's a lot to do in other places around the world. So my encouragement to folks would be to have a lot more of a global mindset in this time when globalism is dying. In venture, it can be very much alive.
Wonderful.